stock which is on our radar right now is Rites. Now, Rites has seen the stock price is down close to about 4.5%, subdued set of earnings. It's the exports which have hit the company, causing a 10% slip on a year-on-year basis. The positive in the numbers is the margin improvement, which stands at 28%. Rahul Mithal, the chairman and MD of Rites, now joins in. Rahul, morning, Rima here. Can you talk about this top-line weakness that we've seen, particularly on exports? What led to that? Were there some projects which got deferred, and what can you guide for FY24?
Good morning. Yes, you see, the export stream of revenue, which is export of rolling stock, we had an opening order book of about 400 crores, and the total revenue from this stream was 300 crores this year. So these were all pre-COVID orders. These were export of rolling stocks to Mozambique, to Sri Lanka, and post-COVID, we've been engaging very aggressively from various clients, both in Africa and Southeast Asia. And we are now very confident that in the coming months, we will be able to convert it into a finite order. And that is what will bring back this stream of revenue. So this is the only stream of revenue which saw about a 70 to 80% drop in this FY.
Okay. I wanted to talk a little bit about what the current order book is. Where does it stand at the end of FY23? And what is your order visibility looking like? I'm asking because, there are certain spaces like, say, railways, where there's a big pickup in terms of orders. There's big focus from the government, a push from there as well. How much would that contribute to your business? And what is the order visibility now overall?
You see, our order book today stands at 5,850 crores. And in the last FY, we got about 250 fresh orders, a total addition of about 3,000 crores. So except, as I mentioned, the export of rolling stock, all other streams and consultancy being our core strength, we got about a jump of about 30% in our consultancy order book. So across all streams of infrastructure, our order book has grown. This quarter itself, we've got more than 70 orders, totaling to about 780 crores. So moving forward, orders in all areas of consultancy, whether they are metros, highways, rail infra, sustainability, urban engineering, we are getting more orders. We are confident that this order book will grow. The total order book has, as I said, grown by about 1,000 crores in the last FY. And the only stream export of rolling stock, we are also very confident that very soon in the coming, maybe this quarter itself, we should be able to get a finite order.
Okay. Mr. Mithal, could you tell us, will you see, so having said all of this, will you see growth in both top line and bottom line growth in FY24 over FY23? And what kind of growth?
You see, in spite of a drop in about 70 to 80% in my export of rolling stock stream of revenue, we saw a profit growth of about 6 to 7%. Even though the revenue, if you see quarter to quarter, was about 10-11% down, the overall revenue was about flat, but still the profit grew by about 6 to 7%. Consultancy, which is our core strength, saw a 18% jump consultancy revenue year on year. So as I get an order of export of rolling stock, and this starts translating into revenue by latter part of the year, and we keep on the trend of this growth in the consultancy stream of revenue, my profit or bottom line would definitely continue on this trend of growth and would improve, because the export of rolling stock is again a big contributor to the bottom line.
So give us some numbers, Mr. Mithal, to work with. Top line growth in 24. If you can give us a range, if you said you should continue to do 6-7% like last year. And what about margins as well? Some numbers.
You see, we are a consultancy company and we are a bottom line driven company. Our profit grew by about, as I said, 6 to 7%. Our margins grew by about 1%. And there are good, our core EBITDA margins are about 27%. Our PAT margins are about 21%. So with this contribution of export of rolling stock contributing in this FY, this trend is definitely going to increase, to improve our PAT margins, our EBITDA margins. Our aim is to keep them secure. And this growth in profit, about 6 to 7%, will only improve.
Can you give us some numbers on exports, sir? In FY23, your exports were about 300 crore. In FY22, the export revenue was 966 crore. So as you pointed out, it's seen a sharp 70% fall. But what can this 300 crore of exports rise to in FY24?
You see, the order book which stands as of 1st April is only about 100 crores. And this is the balance, as I mentioned, of the two orders which were about 3 years old. These were the pre-COVID orders. And you correctly said 21-22 was the time when post-COVID we did the maximum shipment, and they contributed to about 966 crores. The balance spillover was in 22-23, where we did about 300 crores. So now the aim is to get a fresh order as soon as possible. After the order, it takes some lead time to be able to manufacture the rolling stock and ship it out. That's when the revenue realization takes place. So we would aim to, one, clear this, obviously this 100 crores, which is balance, and by latter part of the FY, start getting a contribution from this stream of revenue.
All right. We will thank you on that note. Thanks a lot for speaking to CNBC TV18, and all the best for the order wins as well as the way forward. Just